How you doing?
Good. How are you?
I'm doing good in my comforts of my home office.
Same here. It's like went out, showed a house today. So social distancing. We were at least 20 feet apart the whole time. So
So how is that going? I mean, are you still getting a lot of calls? And I know you do Zillow too. I mean, a lot of people inquiring and looking.
this has been the craziest, most insane week of my entire career. Our team put 4 buyers and 1 listing under contract.
Yeah, that's awesome.
It's been unbelievable. But before anybody starts getting upset with me, these are all people who need a house and they have to move. And it's not just, oh, I'm bored. I want to go out looking at houses and running people all over everywhere.
Right.
One client that we put under contract, we FaceTimed and they fell in love with the house and they have some health issues. So they didn't see the house until yesterday, 3 days after they were under contract. So I opened the door, they walked through the house, it was vacant. It wasn't an issue of somebody having anything stolen or anything happening. So very safe, very healthy. And then, yeah, but I need you to educate me.
Yeah.
Rumors are running rampant about FHA. What's happening? Are they still
Sure.
happening?
Yeah. So hey, a lot of things has happened in the last 3 weeks, from coronavirus being more prevalent to the Fed's injecting equity into markets by lowering Fed fund rate. Now what we're seeing, because of the bill that was just passed, all government loans qualify for forbearance now. So if someone calls, if you lose your job and you call your bank and say, hey, I can't make my mortgage payment, they have to work with you to put the loan in forbearance. What that means is it's investor by investor. Every bank or every servicer has different requirements. Some will say, great, we'll agree, we'll just tack that onto the back of your loan. Others will put it where it comes due, 1 month, 2 months, whatever it may be. And it all comes due at the same time. So if you skip 3 months, they'll hit you with 3 months worth of mortgage payments all at the end of that time frame. So it's really important that people check if they have an FHA loan and they're calling.
So
What
if your
this does,
payment's $2,000 a month, suddenly you can be hit with a $6,000 bill.
you can. And the problem is there's very little out about this right now. People are getting word about it, but people have been calling their banks for weeks. I've fielded calls about this 3 weeks ago when this first started from some clients that wanted to know, hey, what do I do? So they've been contacting and calling. The problem that this creates for the banks is when you go into forbearance, the mortgage payment isn't paid. Well, it's government secured, but the banks are still responsible in a lot of these instances for interest payments. They still have to pay interest on the loan. So our pricing right now for a government loan versus a conventional loan is way out of whack. Conventional loans still not bad. We can get away with some decent pricing there, especially with good credit. The cost of everything has gone up. So it's very rare to find something without points now. A lot of the stuff we're quoting, unless you're going through bond programs like the Maryland Mortgage Program or anything like that, there's points associated with everything.
Good Lord.
Yeah, it's crazy because I've never charged points. I told a borrower today, I'm like, look, I didn't charge you a point when you bought the house. You're calling me for a refi. I would love to do it. I just can't. It's not available. With government loans, you're getting all these banks that are having to pay interest payments, everything else. I think what's happening is their pricing is so far out of whack because they're overwhelmed with all these people coming in, can't make their payments or defaulting. How many people just didn't even apply for the forbearance and they're defaulting on their loans?
Oh my God.
So you got a lot of people refinancing, a lot of people purchasing government FHA, VA. You're looking at rates. It depends on your credit, but some of the stuff is 3.75 to 4.25 with 2, 3, 4 points. And it's nuts. Depending on your credit, you may have a scenario where there is not a rate available without paying some sort of points.
So if you're looking at, no matter what price house you're looking at, a 0.1%, so that could either be 2,000, 3,000, 4,000, 5,000.
Okay. So what I'm doing for a lot of people right now is I had one last night where They negotiated a pre-occupancy based on their contract. They accepted it, and they allowed the borrower to come in and rent the house for 2 months, 3 months until this gets straightened out. Because USDA loans, a
Yeah.
USDA loan requires transcripts. Well, IRS last Friday shut down issuing transcripts. So unless you have them already, that loan can't go to closing.
Wow. Is that the same thing for VA
No,
or?
there's workarounds. Every investor is different for those. So VA, FHA, conventional, we have workarounds for all that where we can move forward without transcripts. It limits your options as far as pricing and banks because some require it, some don't. So all these things are temporary. You know, this is something that will come to a halt and go back to normal. But we just
Yeah.
don't know when it's going to be. You know, you've got a lot of pieces up in the air. You've got jobless claims are higher than ever before, unemployment. You've got China not in the market, being out of it so long, they're not buying mortgage-backed securities. You know, so the news, everybody sees, oh, the Fed is coming in, they're buying up all the securities. They basically said they're going to buy everything that's out there. Well, they will. The problem is they don't have enough money to buy everything, you know, and that's just a drop in the bucket. It's like, you know, you needing $10,000 and I'm able to give you $5. So
Help much.
it's not much. And there's still a lot of need, you know. So the way these banks raise liquidity and raise money to do business is if they get an onslaught of loans and they say, well, look, let's clear the books. They're going to package up their mortgages, sell them on the market as mortgage-backed securities. China's a large buyer. The Fed now is a large buyer, but there's nothing else. And China's not involved. So
Wow.
when you have a huge supply of something and you can't get rid of it, you keep dropping the price, dropping the price, dropping the price, dropping the price. And that's what's happening right now.
Good Lord. And then you've got today where Hogan came out and said,
Shelter in place.
stay in place. According to the Maryland Association of Realtors website, we are still deemed essential personnel because there are people who have to find a house or they're going to be homeless.
Right.
You know, either their rent's up and they've got someone else moving in, they're transferring to the area, they're transferring out of the area, whatever. So we're going to
You're
continue.
renting, you know, some of these rental companies, the apartments, if your lease is up and you go month to month, your rent could double.
Yep.
I have one of those right now who's trying to buy a house. He's got to be out by middle of May because his rent literally doubles.
Yep.
He doesn't want to sign a full lease.
So what we're going to do on our team is we will continue to show houses, but we're going to do FaceTime first. And then once they find one they like, we will meet them there in person, just to minimize the face-to-face
Exposure, right?
exposure. Because I don't think anyone can ever afford to get sick. And this is such a scary thing that, yeah.
Well, and I'm scheduling more of these Zoom calls than I ever have before. So I'm doing these sharing screen or sharing scenarios and being able to go over it line by line with them. Most people are home. You know, I'm lucky right now. Most of my clients still employed. They're DOD, essential personnel, but they're all working at home. I can get a lot more done with everybody working at home because it's easy to get both parties if it's a husband and wife on the phone. Which is
and I create a Zoom account too. So now I can do that with our buyers who want just information. Instead of doing a phone call, we can actually do face-to-face and meet them before, you know, instead of before, it's like you just meet out somewhere, get to know each other, shake hands, walk in, see properties. Now we can get to know each other.
You can't go to closing with them anymore either. So it might be the only contact you have.
No, I have a settlement Friday and I hate the fact that I'm not going to be able to be there.
Right.
Hand them the key and wish them all the best.
Yep.
So I think we probably have about 6 more weeks of this.
One of the best programs going right now, and I'm going to probably put something out later this week, is the Maryland Mortgage Program. So as crazy and as wacky as rates are, their rates right now, it's a backed by the Maryland Housing Authority. You don't have to be a first-time home buyer to utilize it. You just have to qualify within their income restraints and everything else and not be over their limits, just like a USDA loan.
So what is you and I went over this on Saturday. For Calvert, what is the USDA limit for?
Uh,
Um,
for a household,
yeah.
I got it up right here. So it goes off the lower of the two. So if you're looking at, let's talk CDA first. So if you're in Calvert County, your first income limit you have to worry about for this Maryland mortgage program, 1 to 2 people, is 145,560. So St. Mary's County, a little bit different. St. Mary's County is 101,700 for 1 to 2 people. So it jumps up when you go to 3 people for that Maryland mortgage program. But you know, you're still, I mean, 2 people in a household, you're going to be pretty close, depending on if you're both employed and everything else, you're going to be pretty close to that. I've got a young couple right now that they're over in St. Mary's, but they're not over in Calvert. So it really limits them where they can buy or what they buy. For USDA in St. Mary's, you're at 108,550.
So if you're doing CDA, you'd be limited to the 101.
You would.
Okay.
If you're buying in Calvert, big difference. It's 111,550. Not huge, but that's what you're limited to.
Yeah. Because I know the battle you and I were going through this weekend and trying to magically make numbers work, and
Yeah.
just wouldn't happen. So.
But it's worth looking into, because when you talk rates, you know, we talked a while ago with the rates and the points. Today, you know, this program is, I'll see if they've updated it. Nope, still the same. First time home buyer using this program, 2.75%, no points.
That's a huge difference.
Not allowed to charge points. I mean, there's a small additional cost for doing this program, but far outweighs the benefit from the rate, far outweighs the cost.
Wow.
There's grant money available. There's 3%. I mean, there's all kinds of pieces to this that you can utilize. 3%, 4%. They got the student loan program. We just did one of those where a borrower paid off his student loans through the program and bought a house at the same time.
That's pretty cool.
Yeah.
Wow. And I think going forward, we're all going to have to change the way we do business and change the way everything about this is going to be completely different. But I think it's going to be in a good way for those of us who are used to technology. It's not going to be a big deal.
Right.
You know, using Zoom calls, using FaceTime Live, you know, whatever. I mean, it's so many different things that can come up. But the cool part for me is now I can actually, with Zoom, go over a contract with a buyer or a seller face to face.
Right.
Have them looking at it on their screen instead of, you know, talking on the phone going, okay, now if you read down through paragraph, whatever, on page, whatever,
Yes.
they can see it. Yeah, we can look at it on the screen. So, yeah.
And the biggest thing too, and from your side and my side, is I'm starting to see a lot of these online lenders come back with these crazy estimates. And the thing that, this is not a specific bank by specific bank. This is everybody. This affects every single lender, every single bank out there. Now, there may be some small pockets of money somewhere that a bank has left over to be able to offer you for purchase or refis. But be very leery of seeing something way out of bounds of what everybody else is telling you. You know, it's especially from somebody who's online that you can't talk to, that's not local, that, you know, they hesitate to get you an estimate, you know, or it has on there, you know, this is good for the next 2 hours type of thing. So that's literally how long it takes for rates to change.
I know you and I had talked last week, I think it was, about the credit score being increased for FHA. And I've seen some lenders posting on Facebook that they can still do it for a 580 credit score, where others I'm seeing you need 620 or higher. And then I'm seeing some people posting that the construction loan they were working with is no longer going to be funded until this is over with.
Small banks, this is affecting harder. The small crazy banks that bank statement loans, credit unions, things like that, that are holding things themselves, doing a loan like the construction loans.
Yeah.
It's interesting because they're going to stop funding a lot of these loans. And you talk about the credit scores. I've heard stories of locks being denied because it's just does not fit in their window anymore, and they can't allocate funds for a 580 borrower when they've got plenty of 700 borrowers. So they've really got to be choicey about what they do. The cost, if you were to price up a loan right now for a 580 or 600 FHA, don't even know if you get pricing. And I mean, I did one, it was like 605, which we have banks that'll do it, but the cost was like 12 or 13 points. It's just, it's not feasible. You can't.
Well, if you've got that kind of money, do conventional.
Yeah, it just doesn't make sense.
Holy cow. Yeah, because on one of the private pages I'm on, someone did a screenshot of a conversation to where their buyer was denied an FHA loan, I think a day or two before settlement, because their score was 580 and the lender was no longer able to sell it.
Correct.
In the secondary market.
Correct. They no longer will take it, and that's why they're denying locks and canceling loans, because they no longer can package that credit score up and even come close to selling it. And they don't have the liquidity or the means to hold it anymore.
Good Lord. Interesting times.
And but it's changing daily. What we're seeing, and the changes and the updates and everything else. It really is.
Yeah, the two good things that have come out today so far, and obviously everything can change by tonight, is that realtors are deemed essential personnel along with title companies and lenders. So we're not closing doors. I mean, we're not meeting anyone in the office, but we can still help them buy a house or sell. And two, I believe it was a executive order that came out allowing e-notary.
A lot of title companies, I'm getting notification, they're putting that in place. They're trying to basically get everything organized so that they can do it.
Yeah, which is huge, because I mean, it is important to do the whole social distancing and be smart and be safe.
Right.
Because nothing is worth getting sick.
And the biggest thing is being upfront with clients, talking to them, telling them what to expect. I had a client this weekend, I went over rates with him. I told him, I said, look, I know you're going to shop. Go ahead and do your due diligence, see what you can get. I said, but you got to be leery of it. It's if you see something that's crazy, it's not going to last long.
No, it's sort of like that Black Friday sale that if you're there between 3 o'clock in the morning and 3:15, you can get that big screen TV for $1.99. So.
Your friend that talked to a bank last week, and until they got on Tuesday or Monday, wasn't available on Thursday, let alone calling somebody today and saying, hey, well, this is what I heard I could get. Doesn't work like that. We literally saw major impacts to our rates and the cost of rates Thursday and Friday last week.
I guess it's one of those times where we just buckle up and enjoy the ride.
No, we can't even go to happy hour anymore. Come on.
I know.
Virtual happy hour, right?
And does the stay in place thing shut down restaurants too to be able to?
I asked that. I'm like, are you still able to do takeout? I mean, I don't know. It says you should be able to go out for food, and things like, and work if you're necessary.
Yeah.
Grocery store, but does that mean you can still do the takeout? I don't know.
I don't know. I think I may pick a local restaurant just to kind of help them out a little bit and do takeout tonight in case it is the last night.
The last night. I texted you
that I'm stuck cooking, and God help Brent. So
I texted you the other night about Latte Teca. That was phenomenal. Like takeout margarita. Best thing ever. It's like a walking beer in Key West. I loved it.
Oh my God. All right. That may be tonight. So
bring it home and enjoy it.
Sweet. So,
all right. Well, I think I actually got a couple clients from Zillow today, I think from you or from Heather. So I will give you guys a call later on today.
Sounds good. Much appreciated. Yeah. So as always, thank you.
You're welcome. Talk to you soon.
All right, bye.